Welcome back once again, and this is going to take a different set from the videos I've been putting out. This is a trade explanation video, and these trades I'm going to explain here averaged me in total of 4% last week to my trading account. And so without wasting much of your time, I will take you straight to TradingView to explain and break down my whole idea and thought process behind why I took these trades. Quickly, let's switch to that. So now, as you all know, last week was very tight in the majors as the price action was very corny, trading, consolidating, and all of that. So I switched to the crosses, and this was one of the charts that I looked at. So previously, I had this mark, and you can see that from the weekly, you could see that this is sort of a huge consolidation after this huge run up, all right? But the past few weeks, the past week since December 2020, 22nd December thereabouts, it's been trading down. The euro has been very weak as opposed to the Aussie. And so this is the previous week. You could see that breaking up. You could see that it closed very bearishly. The previous week also did the same. This doing the same. This was with the exception of this trading inside of this. All of that weeks has been trading very, very bearishly, right? So this one had closed very bearishly, strongly below the previous week, giving me the indication that this is going to be another trading week to the downside. So I marked this as the target, right? Because there's this opening gap here, the fair value gap here, which I envisage that price is actually trading into it, right? This is the previous week. Price nearly tapped this level. It didn't, leaving it closed. Rejection here. All right. So here's what I did. And I'll take you through it. I marked this out, right, and expected price to reach into it. And so now let's switch to the dailies and witness the sort of signatures that is happening on the dailies, right? You could see that we created a range here, price reached into it, and then on Friday, price closed below this, and then this is the opening week for Monday. So I'll put this here for Monday, last week trading. All right, so this is Friday. Friday came closed below this opening, but left this one, right? We worked it, but it didn't close below it, right? But then Monday opened, Monday closed, and then Monday closed below that. So I would mark it. No, let me just use this one here. All right, so this was inadvertently OB, and it was very good for me because granted the whole thing was pointing downwards, and then seeing this sort of signature in price on the dailies put a strong conviction in my bias that we were set for price to trade lower. All right, so this is Tuesday, this is Monday close, this is Tuesday, Tuesday traced into the other block, and then this is when I took the trade. On Wednesday, you see the expansion, and that was it. All right, so let's go to the H4. Now, you see, these are the trades I took, but then I just want us to start building the whole narrative from um, Monday. So this is Monday. Monday trades into the other block and then close below it on the H4, signifying that the H4 is also in the same direction as I'm expecting on the daily and then on the weekly, right? The weekly is bearish, and then the daily, the H4 is also closing below up candles, right? Closed below up candle, comes back in, and then also close below it here, right? So Tuesday comes, let's go to the H1, right? This is Monday's trading day. Price trades into the other block and then also comes back to close below it. And then we have this as a pullback, and then also closing below. Look at this, look at this, look at this, look at this. All right, look at this. So let me just make this very simple. This is the range, this is the pullback, and then that is the close below. But how do I get it, right? These are the up candles, right? So these are very significant for me when price close below here. You can see that's exactly where I took the trade, and it was during Asia. I took the trade in Asia, right? In Asia. So Monday close here, and then price opens, and then you can see that these are consolidations, right? Up candles. Look at this price trading all the way here. Okay, so it leaves a fair value gap as we are retracing. This is the H1. It leaves a fair value gap as we are retracing, and then price comes to close below the fair value gap here, right? So now this is a BPR. Okay, this is a BPR, and then we close back into the BPR for Tuesday. This Tuesday opens and it gaps into it, and then I see this close below this up candle over here. This one opens, pull back, and then that is where I knew that price was actually ready to go where I was expecting it to. So this is the M15. See how price trades up and then comes back to close, right? That's where I took the trade here on this candle. That's where I took the trade. And then I had my stop loss above this candle. Yeah. Just because if price comes all the way to take out the initial high that has been set during um Asia, right? I had it way above this fair value gap or this BPR, not fair value gap anymore. With and then we had a nice pullback into it. Yeah. Now where did I set my um first TP? My first point was this is, remember the level I marked on the H1 on the weekly. This is it. The first level I marked on the weekly. The reason I extended my TP into this is I think I used um uh, deviations. Was it the deviations I used? I think I used the deviations. Standard deviation. I turned it. Sorry. I used the standard deviation of the pullback. See, this is one, and then I targeted the two here. Right, that's what I used. The deviation of this pullback. Right, the deviation of this pullback. So this is the pullback, and then this is going to be the extension. So I used the second deviation of this pullback. So one flip, and it landed straight on the higher time frame level I was expecting price to hit. And then secondly, this is it, right? Besides, it was a Wednesday, this was Tuesday, the week was still developing, right? So that's how I set my TP, right? So this is the first trade I put. That's it. Price hits this, and then on the H1, let's go back to the H1. That's why I framed the second trade from. Right, price hit this, taking strong liquidity, and then during London, I saw this. So I knew that this was definitely a pullback because there was no significant change in market structure or order flow on any of the higher time frames, right? So this was only a pullback for me. Plus, if I draw plus if I put a range here, you should see that we have an H1 FVG above the 50% of the trading range that has been created. So now let me delete this one for you. I'm trying to make it very, very simple. Right, so we have a fair value gap here, and we have a short-term induced high that has been created here as an internal range liquidity. And now go down to the M5. Time frame alignment, guys. So the M5, this is the M5 price comes during London, takes it, and then close below this one. Yeah, that's the change in market structure. We create a small range, and then this is the pullback. Now you could see that this is a small induced high. Price takes that, and also, right, as soon as price takes that, comes down, this is what I am looking at. Right, this is what I'm looking at, the small fair value gap. But whatever the case is, everything is pointing to weakness in the euro against the Oz. Right, so that's it. I went in there with my stop above this, the high that was created during London. Right, and then the stop loss at the take profit again the same level, and that's it. Right, easy peasy. This was the trade I took, and it was very easy for me. Uh, there was no stress, nothing, as the dollar was actually consolidating. This is what I actually took, no stress, and I didn't take any other trade again. So Wednesday, these two averaged me 4% on my account, and that's what you were looking at from the start. This is it. These are the trades, right? So quickly, that's it. This is more like a journal for me to show that yes, the things that I put out here, I follow them myself. And it's more like a playbook where I go back to my trades and check them as against what I'm expecting on the charts. So as much as I know it's going to be helpful for some of you, it is also very personal to me in the sense that it is telling me that I am following my own stuff and everything that I am putting out here. So if this is any helpful to you, which I believe is, do like and subscribe. If you have any comments, I believe that this was quite simple. The explanation I gave here was quite simple, but if it wasn't, you can kindly rewind the video to check it again. Thank you very much for your time, and I will see you next time.